Hey guys, so today is Saturday, July 12th, 9:34 p.m., and I'm just here to give another portfolio update. So, as of July 12th, our portfolio is now at $323,000, so new all-time highs. If we were to look at the performance of our portfolio, all time since April 1st, 2024, we're up almost 13%, made about $37,000 in terms of actual money. If we just look at the 1 year, we're up 10.13%, but just reminder, this is going back to July 12th of 2024. July, August, I wasn't really doing the portfolio, managing the portfolio the way I'm managing it now. That really started in September. Before that, I was doing some options, which was going really, really well first, but then it at the end resulted with me being down about $2,000, $3,000. So I think once we get to September 2025, and we can kind of go back 1 year to when I actually started doing what I'm doing, managing my portfolio, that'll be a more accurate number. But some other statistics in the last 6 months, we're up 6.23%, which is an $19,000 gain. Last 3 months, we're up 23%, which is about $61,000 gain. In the past month, we're up 3.64%, which is about $11,000 gain. A few things that I want to share with you because there's a couple of big announcements I got to make. The first announcement is I'm changing the way I'm doing swing trades. So, in the past, when I did swing trades, I focused about more on mitigating risk, minimizing risk. So what you saw before in my previous videos is that when I did a swing trade, I probably just invest $100 to $200, and I'll be happy with like a $27 gain. If you look at the one that we're looking at here, SOXL, I got out after a $27 gain. PayPal, I got out over a $20 gain. Sometimes I'll NVO to 40s, but usually don't see anything in the triple digits, nothing over 100, right? So even here, looking at December 12th, um, December 10th to December 13th, all the four swing trades that I did was just in the double digits. So $20, $22, $25, $63. Because I was playing it safe. Because those of you who've been following me for some time now know that even though I invest in some pretty high risk single stocks or crypto, I'm still all about minimizing risk. I'm still conservative at heart, which is why in the past when I did swing trades, it was always with $100 or $200, and I was good with like a 10 or 20, 15% return. But now, because we've been winning so much, I'm gotten to a point where mentally I'm just very confident with my swing trades. And my new rule is not go for an average of $20 and get out. My new rule is to go for an average of $100 and get out. So starting probably from end of June, if you look at my charts, starting from let's say LQWD, which I sold on June 26th, I got out of $123 profit on that. HIMS, I got out of $86 profit. OCLO, $96. SoFi was a long-term position, so it's not really a swing trade. We won't look at this number. Um, this one is OCLO again, which made $240. And then Google, $137. Tesla, just a hold for 3 days. We made $136 and we got out. Archer, pretty similar, 9 days, bought on July 1st, sold on July 10th. We made $101. So yeah, that's a big thing that's going to change. I think the good news about making this change is that uh, I'm basically going for 5x the profits on the swing trades. So what that means is that my portfolio will be growing a lot faster when I do these swing trades, more profitable. The bad news is I'm probably putting myself to more risk, but because I am so confident with my swing trades now, that I'm okay with that risk. Just to announce, in case you haven't noticed, I finally got my first loss. If you looked since October 2024, I've haven't taken a single loss yet. Two break evens, and that's things that I couldn't really control. Just wanted to get out of due to really fast macroeconomic headwinds. But the most recent one, I'll just quickly talk about why I took the loss. First of all, it's kind of like when you've been winning for so much, you're kind of looking for a loss. I think that was me. I kind of wanted to give myself a loss so I don't get too confident. I did do options in the past, and I felt like, you know, my discipline was good. My knowledge of when to get into stocks, when to get out was great. But then sometimes, like I get too overconfident, and that was kind of sometimes like a downfall for me. So same thing here. One, I was kind of like I just want to get a loss out of the way so that it doesn't seem like a big deal anymore. But actually, the main reason is that because I wanted money to pour into Ethereum. Like I wanted to pour some money into Ethereum. I had XSU. Those of you who are not familiar with this trade, I bought this back in last November. XSU follows small caps, and I thought to myself, I was waiting for XSU to break even, and I was almost there. I was probably like maybe 5% down, 5 to 10% down, and small caps has been um, growing quite a bit recently, doing pretty well. But I asked myself, okay, I have XSU on the left. How fast will it grow in the next month, 3 months, 6 months, versus the one I wanted to buy with that money in XSU, which is Ethereum. How fast is Ethereum going to grow in the next month or 3 months or 6 months? And when I, you know, made my best judgment on that, I thought it was going to be Ethereum. I wasn't very interested in making up the $200 that I lost on XSU because the $5,000 to $6,000 that I had in XSU, I probably could put in Ethereum and it can go up a lot faster than that. So that's why I dumped it. And it was on July 10th. And let's see what happened after I took that loss. So that loss was a calculated um, decision that I made. As soon as I put that money into Ethereum and increased my position to $11,000, look what happened on July 10th. This is July 11th. This is July 10th, right? July 10th, the Ethereum ETF that I have, ETHH, was trading about 10.7, 10.8. As soon as Friday hit, we had this huge move up. And all of a sudden, it took me from the red with ETHH. On Thursday, I was in the red, no doubt about it. Now I'm in the green, and I'm up $632. So ditched, I lost 212, so I can be up at least $632 on Ethereum right now. And if the bull market for Ethereum continues next week and in the coming months, this I'm looking for this to probably potentially go up 50%, 70%. So I was okay with taking that loss. So it's not like, I was, trying to be really OCD and not I'm not okay with taking a loss. I take a loss if I think that money can be reallocated somewhere where it makes money faster. So that's why I did that. All right, so I'm just gonna after talking about that, I just want to show you how the accounts are doing because that's probably what some of you guys are very interested in. TFSA, not much to say. You can see I have all the same funds. I barely touch this. The only thing is Ethereum. The only one that I'll be watching in the near future is Ethereum. ETHY is a monthly dividend paying ETF that follows the price of Ethereum. My average on this is $3.26, and I'm close to breaking even. Um, if you look at ETHY back in April, it was trading the 1.9s. Back in May and June, it was trading the twos, right? And then just a week ago, it was trading, in the high twos, right? My average is 3.26. Now with Ethereum being this bullish, we're finally seeing ETHY move towards, $3, pretty close. So I'll be watching this. I think I'll be taking. I'll probably be selling out of Ethereum if there is an opportunity. I definitely want to sell this before this bull market of Ethereum fades and goes away. All right, moving on to RSP. Um, what we have here is some more Archer. So Archer was bought at $9.95. I already sold a bunch of Archer already, but what I have remaining here is just the Archer that I'm selling cover calls on. So I bought at 990s, and then I sold $10 calls. I waited for Archer to move up a little bit. I sold $10 calls, made some good premium on that. This will expire next Friday. And I'm good with that because yeah, I did make a good return on Archer. It wasn't a big investment, so I think I made a good 10-15% of that, and I'm happy with that. Amazon, it's a new position I'm putting RSP, but for those of you who follow me, this is actually a new position in the sense that before I was buying AMZZ, which is a 2x leveraged Amazon stock. I sold out of that, and I made about, I think four. If I look back at my trade log, it was about like $400 or $500. But I'm buying back the Amazon AMZN, the regular Amazon stock, because I don't want to hold the 2x leverage ones for too long because those ones have very high fees. And if you don't buy and sell out of those ones in the short term, you're actually losing. Like the fund is losing its price. So I don't want to be there for too much erosion. So which is why I got out. A new position I got here is ARM. I've invested about five. Well, in this RSP, $4,000. It's down a little bit, but I'm okay with that because this week you can see if ARM is very volatile. It goes up to the 150s, like 151, 152, and then just starts selling off like crazy. There's a lot of short interest with ARM. My average is 146, so I'm only down like a very little bit, like 0.33%. Once ARM goes back up again next week, I'll be in the green, fine. But I like this position. I might hold maybe short term, but I'm looking more like for medium term for ARM because it is a piece of the AI revolution that we're going for. ARM Holdings is one company that makes a part of the chip in the process, AI chips. So I think rather than buying the companies who are kind of like in a race to see who wins the AI race, I'd rather buy a company like ARM, which is, you know, profiting by building those chips. You know what I mean? They're gonna make money regardless. They're not in that race. And then if ARM loses, they get nothing, right? It's not a zero sum game. ARM is just going to profit off of the revolution, regardless of what happens. I also started a new position, Equifax. Very very boring. They're the guys who does check out your credit history, that kind of stuff. Boring, but if you look at the fundamentals of this company, it's really really strong. And I think yeah, it's a good stock to buy into right now. I believe that there's going to be a growth in Equifax that's going to be outbeating the S&P 500, which is why I'm in it. Also for you know this account, I also got into Ethereum. So for the RSP, I'm up 5.52%. Oh, sorry, for the RSP, I'm up 8%. But I invested less money, $765. My other accounts, the non-registered, I'm up less in terms of percentage wise, 5.52, but I'm making more money on that because I invested about $11,000 into that one. Lastly, we have Google, which we're just waiting for it to slowly turn, and I think it will. I think next couple months, Google is going to go for, it's going to kind of, its fortunes are going to turn around. It's been pretty bearish for some time, and it's going to go bullish. And lastly, there's another one that I started. These are swing trades, so new holdings. Fintech company in Latin America has done really good job in the last couple of years growing their revenue, but also getting so many new users who are young to use their platform. I'm in this for a swing. Oscar Health also for a swing as well, and I like my average. I think a lot of people out there are kind of bag holding at the 20s, maybe high teens, like $18. I managed to get in around 512. Actually, in RSP, I have an average of 1490. So I'm pretty happy with that. Just down a little bit, but when this stock rips, it'll rip. Tesla, not much to say. If you watch my previous videos, you'll know where I'm at with Tesla. But I'm still bullish on Tesla. All right. Lastly, I'll go into the two non-registered accounts. So these ones, it will have a mix of both swing trades and long-term positions. Ethereum is now my kind of medium-term position. I think once I hit my numbers for Ethereum, I'll be out, but I can hold it as long as the medium term. It doesn't have to be short term for me to buy and sell. Still have a bit of LQWD left, which is a Canadian company that's holding a lot of Bitcoin. But I mean, for me, it's a very small investment, and I feel good about investing in some Canadian companies for once. Tesla, my big position in that. I've already talked a lot about Tesla. I won't talk about it anymore. VSV is following the S&P, but it's a Canadian fund. I'm up about 5% on that, so that's nice. Visa, also a Canadian position that I'm using my Canadian dollars on, even though it's a U.S. company. For this one, it's been green for a long time since I bought it, but this Friday it dropped quite a bit, so I'm in the red for a little bit, but only by 0.21%. Lastly, looking at my non-registered margin. So remember the difference between the non-registered and non-registered margin is that my non-registered margin is where I'll put my US dollars in. The other non-registered account is just where my Canadian dollars are in. I have more Archer here. I've already sold out of those ones you saw in the swing trade. And I have another position in Amazon here as well. I have a bit of ARM. So you see some stocks here that are similar to the RSP just because, I like these stocks that much. But some things that you won't see is I do have some Marvell technology. I think there is at least a 20 to 30% upside for Marvell technology, but potentially even more because they are part of the AI revolution. New, already talked about that. OPTT, I talked about that in my previous videos. OSCR, I have talked about. PayPal, I think I think there's a relatively good chance that interest rates will be lower in September. I think once interest rates are lowered, companies like PayPal will definitely start ripping a little bit. My average is 79. And before it kind of sold off on Friday, it was in the 76s. So I'm getting pretty close to breaking even. And I'll probably get out of that. SoFi, I've already sold out of, and I'm looking to get back in if there's a chance to do so around earnings to get in at a lower number. But I sold out around $18.88. Um, I bought in at 13.88. So for SoFi, looking at this, I made about $1,549 so far. That's just the stocks that I had that I didn't tie into cover calls. But the remaining ones that I have here are the ones that I tied up for cover calls, and they're a 15 call. And I bought 13.88. So once these sell, I'll be making a little more money on that one as well. Lastly, I have Tempest AI. Again, another stock which is very very volatile and a bit speculative, but I think I got in at a good average because at the beginning of this year, January 2025, it was trading at numbers like $89. So I'm in at $58, which is considerably less. So it's down a little bit at 57, but I don't have a big position, just about 500. Just starting a swing trade on that. So yeah, that's the whole portfolio and what I'm doing right now. I'm in a better position than I was the first time I hit $320,000, because that time was when Tesla was hugely up and all of my stocks were at all-time highs. Now I'm at 323, which is $3,000 more than that 320 that I had before, but Tesla is at a huge red right now, and so are a bunch of my stocks. So it's kind of like 323 is becoming my average now. It's no longer my all-time high. So I think where we go from here is the 330s when Tesla works itself out. I won't use this video to talk about it, but I'm bullish on Tesla, and I'll tell you about all the reasons why and why the whole Elon being political stuff is not something that I think is going to affect the stock in the long term. But yeah, I'm gonna sign off here. Don't want to make the video too long. But I'm super stoked about July and August. We're in the middle of a bull market, and I'll be squeezing all the profits I can before we hit September. So I'm excited for the next couple months. All right, take care.